Today is Monday, January 30th, and this is the ADM Investor Services Weekly Market Kickoff. Today's guests are Alan Bush, Senior Financial Economist here at ADMIS, and Dennis Smith, a livestock specialist broker here at Archer Financial Services. Alan, 30-year Treasury bond futures advanced on Friday in light of the fourth gross domestic product showing only a 1.9% increase, when an advance of 2.2% was expected. What is the outlook for the Treasury bond futures market?
Well, the bonds still look lower, and what we're seeing is, in fact, today there should be some flight to quality buying coming into the bond market with the stock indices under some pressure. And also we did have some bullish news in the form of some economic reports, and yet the bonds are just a shade lower. So the rule of thumb is that any market that ignores bullish news should be considered to be in a bear market or likely to work lower. So our feeling is that nothing has changed. The bond market most likely will continue to come under pressure longer term, and in fact I would expect new lows for the move in the 30-year Treasury bond futures.
It is widely expected that the Federal Open Market Committee will increase its Fed funds rate this year. Can stock index futures advance in the face of tighter Fed policy?
I think they can in the early stages. Now we've had 2 rate increases, and there's probably going to be a couple more, at least 1 or 2 more this year. I think interest rates are simply not high enough to reverse this bull market in stock index futures. So I think we're in store for more bull market, higher prices, and I think this is a trend that will last well into this year.
What is the outlook for gold in light of expectations of tighter credit from the Federal Reserve?
Well, normally tighter credit would be a bearish factor, since the cost to carry increases, and that would be a negative. But I think the reason that interest rates are headed higher is that the economy is improving, and a stronger economy means more inflation. And we're very much on board on the thinking that we will see further commodity inflation and further wage inflation. So it's the inflation influence that will dominate everything else, and that should continue to take both gold and silver substantially higher this year. And I think the next objective for the gold futures comes in right around $12.50.
Dennis, the recent cattle on feed report showed very large placements in December, up 18% from last December. Is the report as bearish as it appears?
Well, we certainly started out that way this morning, gapping lower, pressing hard, testing 40-day moving averages in nearly every cattle contract. But if you look back on what's happening here, we had very light placements in October and November. These are normally large placement months. There were several reasons for that. Plentiful supply of grass and pasture was probably the number 1 reason. Number 2 reason was not a lot of break-even or profitable hedge opportunity when you look at the price of feeder cattle versus the price of deferred live cattle. So those placements were delayed or deferred, so to speak. They all bunched up in December. Large placements, certainly larger than what we expected. I'm hearing, in fact, that placements in January are large as well. But what we're seeing here is an extremely current situation. 120-day cattle, those are cattle on feed that have been on feed for 120 days or longer, is actually down almost 9% from a year ago. So what we're describing is an extremely current feedlot situation. Weights are coming down. It's been a pretty nice winter, not ideal. There is some mud all the way from Ohio to Nebraska, but it's not an extremely difficult winter situation, yet cattle weights are coming down. With feedlots current, I am not bearish toward prices despite today's sharply lower early trade.
You recently commented that monthly cold storage reports, which are typically not market movers, was different last week. What were you referring to in last week's cold storage report?
Yeah, boy, last week's cold storage report was a real game changer, you might say, and I'm talking about the hog market, and I'm more specifically talking about demand for pork. U.S. pork demand has really taken an increase. We saw record large quarterly production in the 4th quarter, and we have seen supplies of pork actually declining during that same period of time. For example, the monthly cold storage report showed no storage of bellies during the month of December. Belly stories stocks were smaller in December, at the end of December, than they were at the end of November. We've never experienced this before, yet production was extremely large in the fourth quarter as far as pork production. We are seeing an unprecedented shift in the demand for pork, and it will continue to drive hog prices higher, in my opinion.
The February hog contract expires in 16 days on February 14th. Where is this contract headed in your opinion?
There's two seasonals that come into play here. There's a seasonal for the hog market to bottom out last week at the end of right at the end of January. I consider last week, last Friday, the low in the seasonal. There's another seasonal that indicates the February hog contract expires strong and typically expires on its high. And I think both of these seasonals will come into play this year in light of that monthly cold storage report, in light of the shift in the demand for pork, in light of the fact that hog weights are also running about 4 pounds below a year ago. So similar to cattle, the hog producers are extremely current in their marketings. We're looking for Feb hogs to expire strong, probably expire on their highs, maybe as high as 70. I should say very likely as high as 70 and possibly as high as 72. We're currently trading around 68.50.
Please remember that the opinions expressed here today are solely the opinions of our guests and are not necessarily the opinions of Archer Financial Services, ADM Investor Services, or Archer Daniels Midland Company. If you have any questions or comments or would like to know more about our services, please contact us at www.admis.com.